Okay, hi everyone. My name is Daniel Torsson. I'm an equity analyst at ABG Sundal Collier, covering the IT and tech sector. For this presentation, we have Proact and CEO Jonas Hasselberg. He's going to present the company for some 15 to 20 minutes, and then I will follow up with a short Q&A session. So I hand over the stage to Jonas, and I will disappear for a short moment. So go ahead, Jonas.
Thank you, Daniel, and good morning, everyone. So like you heard, my name is Jonas Hasselberg. I'm the CEO of Proact since a little bit more than 2 years back. I wanted to talk to you about a couple of things, obviously give you a little bit of background into what kind of company Proact is, how we see the market develop. We'll also talk about what is it we actually deliver to our customers, so you understand that. We'll be using a customer case to give you a clear example of what we do. And then we'll talk about the financial performance and our strategic focus going forward. So next slide, please. So this is a summary of Proact as a company. We're celebrating 26 years this year. We have a large number of customers across Europe. You can see here on the map that we're present in about 14 or 15 different countries across Europe, where Sweden and Nordics is our biggest market, followed by Netherlands, UK, Germany, and then a little bit smaller markets across the Baltics and other parts of Europe. We turn over about 3.6 billion Swedish kronor, and we're just around 1,000 employees across these different countries. So next slide, please. And I think a key thing here in terms of our position in the market is we're very excited about where we stand in the marketplace. Proact has a desire and is very well positioned as a specialist in the IT industry. We are delivering solutions to large enterprises across Europe with focus on data, so storing and managing data and information, which we believe is critical to everybody's digital transformation. So when we look at the agenda of our customers, the CIOs, there's a lot of things happening to drive innovation and improve the speed and flexibility of the organizations and make sure that they are getting value out of all that data they have and are transforming their businesses. We see a big trend to what we call multi-cloud, which is obviously a bit of a technical term, but the fact that our customers will run IT infrastructure in a number of different ways. They will definitely use the public cloud from Amazon or Microsoft. They will run old legacy infrastructure that they may have had for many, many years, and they will be using players like Proact to store data maybe in a more secure and a controlled way. Customers want to know where the data is stored, how it's stored, that it's secure, and this is where we come in. Obviously, Corona has made some changes, accelerated some of this digital transformation we're seeing, but also, of course, made a lot of change to how people work. And like today, we're all sitting at home from home because of the pandemic. So overall, well positioned in a marketplace that's changing and where data and information is at the core of the transformation of our customers. Next slide. And that's then also visible in some research we see from external research firms. So on the left-hand side on the slide, the bars, you'll see the more traditional business of ours. So this would be when we are reselling software and hardware, which is a significant part of our business. And you can see that there's been a expected drop in 2020, largely driven or solely driven by the pandemic, but the business is then recovering in all our main markets. And we do expect to see some growth in our traditional business as well with hardware and software sales. Single-digit or even low single-digit growth, but still. And then on the right-hand side, less trending, but still CAGR or average growth rate over the next couple of years of cloud services, so delivering the same functionality to our customers, but in the form of a cloud service rather than hardware and software, growing more rapidly at an 8% growth rate. Next slide. And like I said, we are well positioned in the marketplace, and we want to be positioned, or we are positioning ourselves as a specialist. There are a lot of generalists out there, which makes it a little bit more difficult to make good margins. So we're very focused on being specialists. We have 5 main pillars of our offering. We advise our customers, of course, in terms of strategic decisions, as well as could be things like how to manage data, how to classify data, or how to store data in a secure way. We do have storage products. We have networking products that connect to the data, security products to make sure it's safe and protected, and ultimately, of course, helping our customers getting value out of our data. So those 5 areas are the pillars of our value proposition, all geared around data and information. Next slide, and I'll talk about a customer case of ours. It's a Swedish company called Fortnox, relatively famous here local in Sweden. They are a software as a service provider targeting mid-sized enterprises with a ERP or a finance system. Obviously, the data of their customers is super critical to them, mission critical, and it needs to be stored in a way that's safe, always available, and highly reliable. And we are delivering a cloud solution for them that enables them to be more robust, but more importantly, it's very modern, built on the latest cloud technologies, but also gives them that value and flexibility and innovation capability to develop their product. So if you go to the next slide, the component then of this offering is a set of storage products. So this is where we deliver storage technology, hardware and software that are being put in data centers that are partly under our control and part under Fortnox's control. So this is exactly what we mean by multi-cloud, that they use the different technologies and different ways of deploying technology depending on their needs. It's in 3 different data centers, so they are geographically spread across Sweden to make sure that they are redundant and safe. They want the data to be stored where they can control it and locally, so it's under their legal control as well. And then next slide. We're providing them with networking connectivity, both between these data centers, but obviously also between their premises and and of course access to the internet so customers can get to them. So we're providing very modern connectivity and using our cross-border capabilities with skills out of other parts of the company outside of Sweden to deliver networking services. And then on the next slide, we make sure that it's safe. So like I mentioned already, it's physically located in Sweden. It's full redundancy through the 3 different data centers that I mentioned, and then we provide a number of cloud services of ours or our managed cloud services portfolio to make sure that these systems are up and running and delivering value 24 hours a day. And then on the last slide here on this case, please. We deliver then the ultimate business value here to Fortnox. So the point here is we deliver consulting services to help them design the system. We've sold them hardware and software solutions to enable their new modern infrastructure. And then we provide our own cloud services in the form of networking and systems management and backup solutions to make sure that this data is protected and safe. So we believe it's a good case study, an example of how we deliver IT infrastructure in a way that's very, very complete and holistic, very focused on data, like I said, and in this particular case, meeting the needs of Fortnox very specifically. Good. Let's go into the financial numbers on the next slide. So this is what it looks like for our year-to-date numbers. We've been a little bit less impacted by the pandemic than we expected at the beginning of the pandemic. We were definitely aware that this will have a significant impact. We're now seeing a slight growth. We have 10% growth year to date, 1% of which is organic. We see good growth on our services business and very good growth of our cloud business, and 14% of the cloud business is through organic growth. And Ebitda has improved very well, and that's a combination of better margins on our products and driven by revenue mix and gross margins, But obviously, as we also communicated here about half a year ago, that we have been working very focused on our costs and been able to reduce costs in a good way, so which has contributed to a positive Ebitda development. So good revenue development, partly then through the acquisition of Peopleware a year ago, and partly organic, and in particular good growth in our services business. Next slide. We communicated 2 years ago that our new financial targets, or long-term targets, they remain stable. So we are still targeting a growth on average of 10% per year or more. This will be a mix of organic growth and acquired growth. Profitability, we measure profitability as Ebitda. We want to be at a level of 8. I think currently we're just around 6%, so there's 2 more percentage points to go. We think that's doable through a combination of revenue mix shift to services, scale as we grow, and that we have still improvements internally to get our service delivery in particular to be even more efficient and even more automated as we grow. So there's opportunities and activities in place to make that happen. And then last, as I already alluded to, it's very important to us to grow our services component of our revenue. Right now it's right around 40%. We want that to be at least 50%. And the majority of that growth from 40 to 50 should come then from our own cloud services. This will give us a contracted revenue. Typically the contracts for cloud services as well as our support services are 3 years, sometimes 5 years. So obviously contracted service revenue gives us better predictability and some stability to our business. Obviously also better relationship with our customers and adding more value to our customers. So it's an important strategic move for us. So if we go to the next slide, we'll talk at a high level what we're doing to get there. So if we look at our strategy across 5 different buckets, obviously the market position that we're playing in and that we want to strengthen all around being that data management specialist and create competitive edge. Our own people is super important. The competence and the skills and the expertise is something we work quite a bit with. Broadening our portfolio and conducting sustainable business, frankly, is important. In the area of commercial and portfolio, a lot of work then on broadening the portfolio and also in broadening our capability of selling cloud services. So being able to reach into new areas of our customers. More often now these decisions are made not in the traditional, or not only I should say, in the traditional IT department, but also being made by business owners in the organization that we're working with, because they are a key part of realizing a digital transformation and operational efficiency or better decision making, whatever the use case may be. So we're working very much on our commercial go-to-market capabilities. At the same time, we do believe that the traditional systems business, the selling of hardware and software, is going to be a key part also going forward. I mentioned we believe it's going to grow, even though single digit or low single digit. So we'll continue to develop that area. Artificial intelligence is one of those areas where we see a lot of use cases within our customers happening and where we would both have to broaden our offering in that area, in the systems area, but also engage with a different type of buyer within our customer. Operational excellence, I mentioned already, super critical to our long-term efficiency and reach our financial goals, but obviously also to make sure that we deliver with great quality to our customers, or I should say continue to deliver with great quality to our customers, because we do that already today. But quality and customer satisfaction is high focus here, and then the speed and efficiency of our service delivery. And we have very recently deployed a new tool that automates and improves our customer processes. It's just one of those initiatives we're doing in the area of operational excellence. Fourth area in our strategy is our people, as I mentioned. So being able to attract and develop and empower our leaders is one of the strategic areas we focus on. And like I mentioned already, sustainability, where diversity is one of our key focus areas. Clearly, just code of conduct and being an ethical business in the way we engage with customers and partners, and environmental, making sure that our data centers are as environmentally friendly as feasible. And then last, but definitely not least, as I mentioned, M&A is strategically important to us, and it's helping us accelerate the strategy, both through then broadening our portfolio in areas where we want to grow. That will be areas like public cloud, where we do see a big business opportunity, networking, which will be more and more important, in particular in the context of public cloud, and security, which is an area where our customers are seeing an increased need, and we want to be able to deliver more security services to our customers. So that's the 5 areas of our strategy, and I just wanted to dive in next slide a little bit deeper on the M&A, because we did relatively recently, about a month ago, an acquisition in the UK. So that will be the second acquisition here in about a 12-month period. We also did an acquisition in Netherlands in October of 2019. But this year then, we bought a company called Cetus Solutions. They're based out of Manchester in the UK. A little bit smaller company compared to last year's acquisition. They are 50 employees. They're turning over about 13 million pounds. But have very strong capabilities in cloud technologies and what we call modern workspace, so enabling the employees and the users of our customers to be more flexible in how they work, and obviously remote working is one of those key drivers. They have very strong partnerships with key technology vendors, like you see listed here. So they bring in not only new customers into the Proact business, but they also bring expertise in areas where we that will enable us to grow in the UK markets. Complementary from a customer perspective, so while they are playing in the same segment of mid to large enterprises, we have very little overlap between customers, which means that we now, when we combine our 2 customer bases, see a very good opportunity for cross and upsell of our offerings, so being able to bring Cetus offerings into the existing Proact customers and vice versa. And obviously then the complementary portfolio is also enabling that. And last but definitely not least, like with all our acquisitions, we want them to have a positive contribution to our Ebitda growth target, and that's also true for the Cetus acquisition. So in many ways, a good representation of the kinds of acquisitions we're looking at here as part of our strategy. So next slide is just summarizing what we're communicating here today. We're very well positioned in a marketplace where we see growth and where our expertise is at the front and center of our customers' digital transformation journeys. We are on good track executing against our strategy. We do see positive development of our financial results here during 2020 and year to date, despite the pandemic. And last but not least, we are also then tracking on our M&A story with this latest acquisition of Cetus Solutions in the UK. So that's my last slide. Thank you very much. Back to you, Daniel.
Yes, excellent, Jonas. Thank you very much for a good presentation. I start off with a question regarding the pandemic effects, actually. Have you seen any change in the consumer or customer behavior in terms of investments in system sales versus service or cloud? Because when I look at the cloud order intake, it's quite weak throughout the year, and you said that has been negatively affected by the pandemic. Isn't that quite surprising? It could be the other way around, actually.
Yeah, you're absolutely right. We were a little bit surprised. So when the pandemic started to worry us here back in February, March, we did a lot of scenario planning and try to anticipate how to mitigate the impact. And we, of course, expected that we would be mostly impacted in our consulting business, that our customers would on their own part save money by reducing the usage of consultants, and we expected the systems business to decline because it's something that's quick for them to push forward, transactional purchasing of hardware and software. The effect was quite the opposite. Our consulting business has a little bit of dip in second quarter, but otherwise it's been chugging along very nicely. Our systems business, as you've seen, have definitely been strong during the year. And what we have seen challenges with are two things. One is, as you say, signing up new contracts on our cloud offerings and engaging new customers in general. So, and it's been a combination of just difficulties doing business via this medium of Teams, and people being a little bit reluctant, or customers being a little bit reluctant to make 3 to 5 year commitments in times of uncertainty. I think over the last couple of months, we see a little bit of change of behavior. It's probably a combination of maybe either see some light in the tunnel of the pandemic, although the second wave is maybe blurring that a little bit, but frankly a pent-up demand, and people are getting used to this new way of working and new day of doing business, and can't sit still. So we see a little bit of positive development on our business now, which is good.
Okay, interesting. And then the question on the business model in cloud. Are you offering the cloud solutions as price per data in general, or more a fixed price for an implemented solution? I mean, is the data volume itself a revenue driver for you?
Yeah. No, and it varies quite a bit. And our solutions, as you can imagine, as we go into really large enterprise, is very complex. So the pricing model it's a mix of a number of things. And in many cases, there are dedicated implementation. So it's not like when you and I buy a Spotify subscription or a Netflix subscription. It's a super standardized package. It's all running out of the same backend. So we often implement dedicated systems for a particular customer. So it will then be based on definitely the capacity of the system, so storage capacity, but could also be things like the underlying architecture investments and depreciations and SLA, so the quality requirements they have on things like uptime or response time. So it's a mix of a number of different components, but ultimately it comes down to the capabilities of the service.
Okay, I see. A question about the Cetus Solutions acquisition you made around 5 weeks ago. So what are the first impressions? How is it going with implementation? Everyone's working from home in the UK, etc. Any surprises you have seen there?
Yeah, positive surprises so far, which is great. The team, obviously in Cetus, everybody gets a little bit worried when there's a new owner, and in Cetus' case, they were the founder was the owner, so it was everybody knew the owner, and then the owner was active as the managing director. So obviously, it's a concern when, relatively speaking, a bigger company comes in. That has been very well received. We've been very active with communication, and our local team in the UK is meeting with the Cetus team on a very regular and high frequency basis. So that's, I think, been very positively received. We see some positive development in the synergies, where both on the revenue side, but also on the cost side of things, as we're now become a bit of a bigger player in the UK and bigger player towards some of the partners we're working with. And a lot of positive engagement in terms of cross and upselling between the teams. So, and we saw the same with the Peopleware acquisition in Netherlands. The sales guys and the customer teams are very eager to get to know each other and find ways to develop the business within the customers. And so that's another positive development.
Okay, excellent. Sounds promising after a month at least.
We think so, yes.
Yeah, and then the question on your Ebitda margin target, 8% going forward. You are around 6%, as you said, and that's going to be driven by a higher share of service sales, partly going forward. And the two most recent acquisitions, Cetus and Peopleware, as you mentioned, they have much higher service revenues than you have, and much higher than 50% of sales, but they were not at 8% themselves. So what else is going to drive that?
So Cetus service component was not too different from ours, but you're absolutely right. Peopleware had a high degree of services revenue, and it's like the thing we spoke about here. There is a scale component of being able to leverage size to improve your margins. There is a mixed component here. Different services are higher gross margins. And then last and definitely not least, the way we deliver this. And we're still, and it's true for peopleware as well, and it's very typical when you're small-ish, a high degree of manual and customer-specific processes where we think we can do things more standardized and automated. So those are the three main components that would help us reach that target: scale, efficiency, and product mix.
Okay, excellent. We have 1 minute left, so I have a final question with a relatively short answer, hopefully. The market is certainly transforming from investing in hardware to migrating into cloud solutions for data storage in general. How far have we really come on that journey for large enterprises? Do you have any good clue?
No, I think there's plenty to go, but I think the main thing to be aware of here, and there's a reason we use this term, which may sound a little bit like an insider, IT industry insider term, a multi-cloud. There won't be a single cloud solution for the future. Our customers will live in a world of different architectures and different technology solutions for different needs. They will use the public cloud. They will use Proact Cloud. They may be running things in their own legacy data centers. And that, I think, we will see for as long as we can predict the future. So it will be a multi-cloud world forever. And I think most customers are aware of this and have come relatively far.
Okay, excellent. We stop there. Thank you very much for the time, Jonas. Good presentation.
Thank you for listening and hosting.
Yeah, and thank you, everyone. And then we go over to the next company. Thank you. Goodbye.